central banks, especially the BOJ and the ECB, are struggling to normalize right now. They seem to be willing to do it at a lower and lower price.
Yes, and I think that, to me, is the most meaningful takeaway of the decision that we've had. The BOJ, like the ECB, is normalizing policy not because the macroeconomic conditions warrant it, right? It's not like inflation is approaching the target in Japan, quite far from it. The trimmed mean went from 0.8 to 0.4. So they're actually moving further away, and yet they want to stop this experiment with yield curve control, seemingly, or at least tweak it. So the decision is motivated not by the underlying macroeconomics, but by concerns about the micro market structure of the JGB market. Equally, for the ECB, the reason why they are taking their foot off the accelerator is not because inflation is approaching the target, but because they feel they've reached the political limit of what they can defend. And we've had some of my colleagues on your show talking about the Bank of England decision. We struggle to characterize that as anything other than a policy make. So you've got three of the major central banks globally.
I love Mark Carney's, by the way, suggestion that it's maybe just a good rule of thumb to raise rates once a year,
Exactly. So if you put all that together, you've got three of the world's major central banks raising rates in spite of macroeconomics. And I struggle to remember a time when we've been in that kind of position before. Right? It's definitely new.